very welcome to this May 2019 management case study pre-scene analysis. And over the course of the next 10 or so videos, we're going to be looking at the fictional business at the heart of this pre-scene, Jord Homes. And what we'll do is move through the pre-scene document section by section, detailing the most important issues as they come up, try to predict perhaps some likely exam issues, and relate the content to the objective theories that you would have come across in E2, F2 and P2. This is the 29th time I have done one of these pre-scene analyses, so I've learned a thing or two along the way about the kinds of issues that are likely to come up based on what we see in the pre-scene document. So let's jump right into the pre-scene itself with this opening section telling you about your role at Jord Homes, which we will now refer to from now on as just Jord. So you're finance manager at Jord, and Jord is a manufacturer and assembler of high quality prefabricated houses. And later on we'll get into detail on what it is exactly that a prefabricated house manufacturer actually does. For the moment though, we can say that Jord is based in the prosperous fictional country based in Central Europe of Corvola. Now, when you think of Central European countries, you think of countries such as Austria, Croatia, Germany, Poland, etc. So there's quite a bit of variation there in terms of socio-economic characteristics, but this particular country is prosperous, and that has implications for both consumers and expenses that the business might have. For example, we would be talking about a nation with consumers that have perhaps considerable spending power, and that's good news for a company like Jord, because Jord is operating in the high end of this particular market. Now, on the flip side, with a very prosperous country like this, you're also likely to have higher wage costs. Luckily, Jord is a company with excellent manufacturing, employs a lot of technology. It's becoming more and more automated in the construction sector, particularly in the prefabricated housing sector. So it depends less perhaps on labour to get the job done than traditional construction firms. But nevertheless, they're going to be dealing with high wage costs. And we will see, especially when we move through the document, that this company employs very highly skilled practitioners, which will add again to their expenses. So as a finance manager at Jord, you report directly to the finance director. So it's clear you're moving up in the world. If you have taken the operational case study, you'll have remembered that you were a lowly finance officer in the operational case study. Now you're a finance manager and you're dealing very directly with the senior people at the business. You yourself work within a small finance team, and your primary responsibilities relate to management accounting. So P2 is going to be key in relation to that responsibility. And what you typically find is that P2 tends to account for most of the marks in the MCS, certainly more of the marks traditionally than have gone to F2 and E2 subject matter. In particular, it's going to be important to review managing costs, activity-based costing, versus more traditional forms of absorption costing, customer profitability analysis, total quality management, cost of quality, just-in-time, theory of constraints. They're all important considerations, and we will detail those theories as we come up against issues when we move through this pre-scene that relate to those theories. Long-term profitability considerations are important too, and that would tie in with theories like target costing and considering the value chain and where value is being added. Pricing strategies, you'll be expected to think about pricing for the services and products that the company sells, and you'll be expected to advise there on demand curves, profit maximization. You might have to consider, for example, price elasticity of demand on the part of consumers in this market. And this is particularly important for multinational firms, transfer pricing issues, perhaps not as relevant for a business like Jord, which is predominantly still centred on its home market, but is starting to dip its toes into cross-border trade, so it will become more of an important issue for them. So, as well as the management accounting area, you'll actually be expected to liaise with colleagues from a wide variety of other functions, from production to sales and marketing to HR. And you're also told that the finance director, your boss, is responsible for financial reporting and strategic management, but she occasionally delegates some of those responsibilities to you. So in other words, what we're seeing here is that you can expect anything on exam day. You can expect issues relating to management accounting and the P2 topics I just highlighted. They are particularly important, but you can also expect issues that relate to E2, and indeed to F2. So as a finance manager, you'll be expected now not just to deal with the execution of day-to-day tasks, but also to monitor the implementation of strategy. So strategy is being formulated at the highest levels of the company, but you will have to actually oversee its implementation so that the people below you are the ones executing on a day-to-day basis that strategy. Your focus will shift in terms of the time horizon from a short-term, day-to-day focus at the operational level to a medium-term focus at the management case study level. So we're talking about considerations and decisions that impact on the medium term, maybe 1 to 3 years. So you might be expected to advise on the right kinds of investments over that time horizon and the prices that would be set for those products, for example. You'll be expected to deal with risk as it relates to strategic decisions being taken that play out over the next 1 to 3 years, perhaps. And because you're talking about longer term strategies and that longer term time focus, you're going to have to put in place longer term sources of financing. You will, of course, be dealing with more advanced financial reporting issues. At F2, you covered consolidation, for example, and that might well come into play on exam day. Because you're moving up the food chain, so to speak, you'll also be expected to deal with the top people at the company. You report directly to the finance director, for example, so you'll be expected to influence top management and to advise them, and not really to sit on the fence anymore. You'll be expected to weigh arguments up, look at the pros and cons, but ideally also make a decision and make a recommendation on the best course of action. And you will be expected to consider the wider environment. So it's not just all about considering the company alone. Instead, you'll be expected to take into consideration the wider economy, your competitors, government regulators, customers, suppliers, etc. And in the last paragraph of this section, we see that Corvola, this fictional country, also has a fictional currency, the C dollar. And that might be quite important as the company starts to trade more across borders, because it means that they will be engaging in activity that will lead to foreign currency transactions, and there will be a need to translate those sums then back to the financial statements at the end of the year. Company law, we're told, in Corvola requires that financial statements be prepared in accordance with international financial reporting standards. So that means that this company is likely to have its house in order, perhaps, and that indicates as well, perhaps, that this is quite a developed country in terms of regulatory oversight, and the authorities are likely playing an important role in overseeing the market participants in Corvola. So what we're going to do over the next 2 pages is take a look at the background to the prefabricated house industry and the development of the industry in recent decades and years. So first of all, we're told that house prefabrication is the practice of manufacturing and assembling the components of a house in a factory and then transporting the sub-assemblies to the construction site. Final assembly, we're told, and the completion of internal fittings is actually carried out on site. And this is different to the conventional approach to house building because basic materials with conventional house building are actually first transported to the site, and almost all of the construction work actually takes place on the site where the house will stay. But with the prefabricated approach, most of the work is actually carried out in a factory beforehand. So you have modules, these big parts that are then pieced together later on the site. Well, those big modules are actually assembled in the factory. So it could be that 60 to 90% or so of the work is actually carried out in the factory, and later on the finishing touches are put and everything is put together on the site. So what we see in the prefabricated house industry is a kind of industrialized approach to construction. We're talking about a lot of automation, the use of machines and technology with less labor input. The labor input really comes on site when the final assembly of the different modules is taking place. But in the factory, it's all about a very slick and modern approach to producing the modules. Much like a car manufacturing factory, actually. We'll talk a little bit more about that in a while. So what you have with this industrialized approach to construction is the development of more standardized processes, shorter construction periods, and all of that then translates into an altogether faster process for the customer. And savings as well are typically found because of a faster, shorter construction period. Indirect costs come down and those savings can be passed on to the end consumer. Although it's important to point out at this stage that while the perception of prefab housing is that it is cheaper, there is a great variety when it comes to quality and price, and we will see that Jord is operating at the very premium end of the market. So we're talking here about a system of production that is being employed in an industrialized fashion, and that is pretty common across all prefab manufacturers, whether they're budget manufacturers, mid-range manufacturers, or indeed premium manufacturers like Jord. Where the differences come into play between those different kinds of manufacturers is in the quality and finish of the materials that they're actually using. But almost all of them employ this industrialized means of construction. So as we move on then, we see that prefabs, or modular homes as they're sometimes referred to, are manufactured in factories using a combination of sophisticated computer-aided design and computer-aided manufacturing. So the CAD, computer-aided design, is a software program used to draw up plans in relation to the cutting, etc., that will take place. And computer-aided manufacturing then is more about machinery doing the cutting, drilling holes in a very precise manner. So this is a very modern, automated manufacturing environment, and that contrasts with the traditional reliance on labour to get the job done with traditional builds. So labour costs are likely to be a little bit lower for a construction company that is operating in the prefab or modular home segment of the market. Manufacturing of a house takes place in advance in the factory a good amount of the work is actually carried out there. And standard sub-assembled sections are cut and put together in the factory. Then they're shipped to the site and they're just pieced together. So machinery and software is doing a lot of the heavy lifting in the factory. These big modular parts are then shipped to the site where the construction team will just piece them together. Construction, we're told, is normally much faster for prefabricated houses than traditionally built houses, as they're built in an enclosed and controlled environment. And what that means is that there are fewer variables to contend with. If you think about extreme weather conditions that can disrupt a traditional build, that is certainly one factor. Because we're often talking as well about timber builds, in the case of prefab homes, timber is the main material that they're relying on. Timber is quite sensitive. It can't be left out in the damp. It can't get overheated, etc. So that would be problematic as well if the raw materials were just sitting around. So not affected by natural events in the same way that traditional builds are. And as I said before, this method of production usually employs far less labour, because a lot of the heavy lifting, as I said, is being done in the factory by machinery and software, and labour then comes on the scene for the last 20 to 40% perhaps of the project, and is just piecing together the assembled modular parts. Basic construction has already been completed before it actually leaves the factory. So all of this then translates to a much faster process. It's a controlled environment that keeps costs down, it keeps surprises down, and the risk of cost overruns is much lower. I'm sure that you all have either directly experienced it or know someone who's directly experienced the stress of cost overruns when it comes to building homes or building extensions. It can be extremely stressful. It can be extremely costly as well. And it is very commonplace when it comes to traditional construction jobs. So the big advantage with prefab homes is that they cost less typically. As I said, there is a great deal of variety in the market, and you've got premium end manufacturers coming on the scene now like Jord, but traditionally it's been all about keeping costs down. And the main way that costs are kept down is through this standardization. You've got standard sub-assembled sections. A company learns when it is churning out what are largely similar sub-assembled sections again and again and again for different jobs. They get very, very good at that. They can do it more quickly, they can do it more cheaply, they can do it with less material, etc. So very controlled manufacturing process, and very, very precise due to the use of machinery and software to do up the designs and do the cutting, etc. And as we said, because less labour is actually being utilised because of this more automated production process, it means that costs are driven down on that front too, and these cost savings then get passed on to the customer. So costly labour is only being utilised to finish off the on-site work. So let's see how the market for prefabricated housing has developed over the decades and in recent years. Well, in the developed markets of Europe and North America, the housing industry in the 20th century has witnessed significant change with the introduction of the prefab housing concept. It's all started up as a kind of a temporary replacement for a lot of the homes that were destroyed during World War II in the 30s and 40s, and then in Europe in the 40s and 50s, these homes were replaced. These temporary homes were put in place to replace the bombed homes that were destroyed in World War II. So that was how it really got up and off the ground in Europe, seen as very, very temporary. And the way that prefab housing took off in North America was a little bit different. Mobile home parks started to become popular in the 1950s. So these would have been popular initially with families that were looking to go on holiday. They might keep a mobile home in a sunny southern state such as Florida. But later on, what happened was they become permanent residences for lower income people. And these people were either at or below the poverty line. So these were mobile homes, and parks sprung up to support the growth of these mobile homes. And unfortunately, there were very negative connotations associated with the people living in mobile home parks. And unfortunate and quite cruel monikers started to appear, such as trailer park trash, which referred to the people actually living in these mobile home parks during the following decades. And it's only really in recent years that the connotations around prefab homes has started to change. Now, it is at this point important also to distinguish between the different types of prefab build, because we've referred to mobile homes just there, but that's just one type of prefab, and it's a lower quality kind of prefab home, because what we're seeing now is that in the 21st century, with technological developments, favourable international governmental regulations, growing populations, and a drive for sustainable housing, those have all acted as big growth drivers to the increasing popularity of the prefab concept. We're talking about altogether higher quality prefab homes than the ones that sprung up in North America in the trailer parks in the 1950s. For a start, these are not mobile homes that we will be referring to during the rest of this pre-scene, certainly not the ones that Jord Homes builds. These are stable establishments. They are just as good, and in fact there are indications that they're even better than traditional brick and mortar homes, and we'll see why over the coming pages. So these big growth drivers have led to a change in perception when it comes to prefab homes. Technological developments, favourable international regulations, growing populations, and a drive for sustainable housing. And at the end of this section, I'm going to unpack each of those four growth drivers a little bit more and explain exactly what each of them means. So previously, we were talking about quite flimsy, weak structures, temporary, that term alone, mobile home. They literally had wheels. You could, latch them onto the back of your car and move to another city. But this is not the case anymore. So those previously temporary, flimsy structures, they were often actually destroyed in storms. But what we see now is, with the advent of technology especially, that recent prefab homes, the stable ones that are replacing brick and mortar homes, are actually more sturdy than traditional brick and mortar builds. There have been studies done in the United States, I know, after hurricanes, etc., in Florida, that showed that the homes that stood up best to hurricanes, tornadoes, etc., were actually prefab homes, the more recent version of prefab homes. So very, very sturdy, very, very resistant and high quality. So increasingly, these prefab homes are being considered as high quality, permanent dwellings for middle income individuals. And even, I would say, it's going beyond that with firms like Jord Homes. They're targeting higher income individuals. Developing countries within Asia and Latin America have large and growing population bases, we're told, with rising disposable income. So that represents a huge opportunity for players in the prefabricated housing industry. Certainly, a company like Jord might be looking at that and thinking, we need to more aggressively export our product to these markets, to Asia and Latin America. We will see in a few pages' time that they're already starting to sell some homes to Asian customers, but they haven't done anything in Latin America yet. So that is certainly an export opportunity for Jord. So the other big thing here is the increasing concern with the general public in relation to green credentials and doing things in a sustainable manner. The increasing drive towards eco-friendly and energy-efficient homes has been a boon for companies in the prefab space. They rely on wood constructions, which is a very energy-efficient material and a very eco-friendly material. And they employ a whole host of other best practices that conform with environmentally friendly practices. And we'll be talking about those as we move through the pre-scene. So very, very positive perception around these houses now in terms of how environmentally friendly they are. And the idea as well is that with production as well, that there is less waste through the employment of technology, some of the technological developments we talked about on the previous page, such as CAD and CAM, very, very precise technologies. That means you're cutting less wood and less wood is being thrown away, for example. You're using absolutely everything that you have in a very efficient manner. And that leads to an energy efficient production environment and an overall low carbon footprint in terms of manufacturing. So high quality and getting away from this original down market image in recent years. Although I would say there is still some way to go on that front. So all prefab companies are likely to benefit from this improving image, not just Jord. As I said before, the build quality for modern prefab homes is at least equal to traditional on-site builds, and in fact there are indications that the build quality is even better due to the employment of very precise manufacturing techniques, due to the fact that because the modules need to be transported often over long distance, they need to be very robust and withstand the rigors of that transport step. So very, very high quality builds we're talking about now for most prefab homes. So as I said, they're actually stronger in many cases than traditional builds. And let's unpack finally the four big growth drivers in this market, starting with technological developments. We've touched on a number of these already. The employment of CAD and CAM for the design and manufacturing, precision technologies that lead to less waste and drive costs down for bigger firms operating in this space. There is a push towards lean manufacturing, which is all about minimizing waste. And this philosophy came from the Japanese, specifically Toyota in the 50s and 60s, and has played out across many manufacturing environments since. Growing populations, before I would say the financial crisis, it mightn't have been such a huge issue. But since the financial crisis of 2007, what we're seeing is that young people especially are finding it hard to get on the property ladder. They are locked out of traditional housing markets, and that means that people are starting to look around at alternatives, and prefab is certainly a good alternative due to the cost-effective way in which production takes place. Sustainability then, I've touched on a few of these areas already, but we're talking in general about less wasteful manufacturing, very energy efficient manufacturing, and indeed energy efficient homes due to the installation of high quality installations such as triple glazing windows, which Jord Homes is expert in, the use of wood, which is a very energy efficient material. It keeps in heat very, very well, so your heating bill is likely to be altogether less costly. And favourable regulations. We will see in a while that in Corvola there is a very favourable regulatory environment. Regulations are not at all stringent, although it does vary from market to market. But typically, worldwide, we've seen governments try to incentivize environmentally friendly firms. And indeed, they try to incentivize the purchase of energy efficient homes as well. There are all sorts of tax breaks, etc., that you can utilize to incentivize those desirable behaviours. So we've been looking at the background of the industry and the recent developments in the market. Now let's take a look at the specific history of our company, Jord Homes. So Jord was formed in 1966 in Corvola. That means it's a company with staying power. Carl Larsson was the founder. He was a master carpenter. And the good news in terms of the natural resources in Corvola is that it is abundant, especially in timber. And high quality timber is the basis for these high quality prefabricated houses. By 1970, we're told Jord had built over 30 houses. So 30 houses in its first 4 years. It's now producing about 100 houses per year. So from this opening paragraph, we are led to believe that the factor conditions in the country of Corvola are indeed very favourable for this company. They rely on timber predominantly to make their houses, and the country is abundant in timber. So your E2 studies, you would have come across Porter's Diamond, where he talks about basic factor conditions such as resources like timber. And we're talking here about a company that specializes in very high quality houses. And when you say high quality, immediately you start to think, okay, that probably means high production costs, and that might well translate then to a high price for the end consumer. And that does indeed seem to be the case for Jord Homes. So the company grew throughout the 70s, and then in 1980, a big decision was taken to build a factory where the company is still based. The factory was built on semi-rural land owned by the Larsson family. And the manufacturing facilities are based here. There's also a showroom, and the head office is based here too. So that has been the home for Jord Homes since 1980. Now, what I would say is this reference to a showroom is a means of marketing the products that this company has to the general public. And there really isn't a lot of mention of marketing in this pre-scene. There is a sales and marketing director, but no promotional activities are referred to. And I think that that is important because there is still something, somewhat of a way to go with the general perception about the quality of prefab housing, particularly maybe at the high end, where very discerning buyers tend still to gravitate towards more traditional brick and mortar on-site builds. And indeed, financial institutions, at least some of them, are a little bit nervous about lending for some of the prefab build projects. But those perceptions are starting to change. But as I said, there is still a little bit of a way to go. And with that kind of perception still hanging on, at least with some people, it's important to market and to get the right message across to the buying public. So the showroom's presumably being used as part of the marketing strategy of the firm. But really, there is only one mention of a showroom here. Is there an opportunity perhaps to open other showrooms throughout Corvola to generate a little bit more in the way of publicity? And another thing I would say is the fact that everything is contained within this one facility, the factory, where most of the work actually takes place, the showroom, the head office, so everything contained in the same place, and that perhaps heightens the risk of some interruption really hurting the company. If there was a fire or something that were to break out, really the company would be faced with a huge problem. If there was an interruption of any kind, production would completely grind to a halt. So Jord is a privately owned limited company with 250 staff, and many of those staff are actually employed at the factory site. And that, of course, makes sense given the fact that most of the activity is taking place not on the site of the construction, but rather at the factory, where most of the work is done. They also then have a team of expert builders, tradespeople and landscapers who go out to work on the site in assembling the different modules and finishing the project off. Now, because we're talking about expert builders and expert trade people, and that term will come up again and again and again. We're talking about experts, we're talking about highly qualified people. It seems that this company is employing the best of the best. That is going to raise labour costs. But one thing I would say is that it might be that Jord, especially operating at the premium end of the market, so their income and prices are likely to be quite high, and the fact that they automate so much of the production gives them that luxury. When they do hire labour, because they're hiring less of it, they can pay that labour handsomely. But it does seem to be a company with high cost built in. Now, 250 staff. Remember that according to the UK definition of a small to medium sized enterprise, a company with under 250 staff could be classed as a small to medium enterprise. And beyond that, they get into the large entity territory. So we might say that Jord is just, on the cusp and is becoming a big company. The other factor that would classify a company in the UK as small to medium sized is the turnover revenue, which is expected to be under £25 million, more or less. When we come to the financial statements later on for Jord, we'll actually see that it is far in excess of 25 million, at least in their own currency. Now, it's impossible to tell what the exchange rate is between Jord's currency and and sterling, so it mightn't exactly be 1-to-1, but you might, more or less, you can entertain that it could be something close, and that means that this company is well beyond that 25 million revenue figure that would classify it as a small to medium-sized enterprise. So Jord is becoming a big company. Now, in terms then of the ownership of the business, Carl Larsen, the founder, no longer works at the business, but his son, Theo, is the chief executive officer. Now, right away, you would start to ask some questions at this very early stage about, whether Theo is actually the best person for this top job. Could it be that Carl favoured his son for the top position, even though he isn't the right person to take that job? So the danger in family-owned businesses is that nepotism can creep in, where a founder perhaps favours his or her daughters and sons for influential positions at the business. So we got to watch out for that as we work through the pre-scene. Several other members of the Larsen family also work in the business. And again, this raises questions about whether they are the most suitable people to be occupying these senior positions. The other consideration is that at family-run firms, especially as the company becomes bigger, more professional, if you have talented people working elsewhere in the organisation, you want to give them a route to the top positions. And if those people start to see that the top positions are only occupied by family members and they feel that that is unfair and that there is favouritism taking place there, they will leave, and you don't want to lose talented people. Now, the other thing with the Larsen family is that as well as occupying the executive positions, they actually own 60%, the majority, in other words, of the shares of the business. The other 40% is owned by several Corvola-based institutional shareholders. And we will talk more about the shareholders in subsequent pages, because there are indications that they are not altogether happy with the strategy of the company at present. So it could be that there is a power struggle for control of this business, and that is a likely exam issue. So let's just reflect a little bit more on the ownership structure and the kind of company that Jord is. So private company rather than being a publicly listed company on a stock exchange, and family run business. There are pros and cons as with any other ownership structure. The pros with a family run business is that you can take, or at least it's more common for family run businesses to take a longer term view. If they're all pulling in the same direction and there isn't bitter conflict, then it can lead to a harmonious long-term outlook setting in at one of these companies. You could say the same with a well-run privately owned company. Again, they're not they're not subject to the pressures of the marketplace in the same way that a publicly listed company is. They're not being analysed by banking analysts, and they're not being talked about in the financial press. So less external pressure generally with privately run businesses. However, you would also say on the flip side that as a privately run business, a privately owned business, there are fewer financing options. This company, if it wants to expand rapidly, cannot tap into equity funding in the same way as a publicly listed company can. Because it's a family-run business, there is a danger of nepotism, which I referred to already. In other words, giving family members positions of power, even though they mightn't be the best people for the job. And also what can happen at family-run businesses is that if conflicts do occur, they tend to be particularly nasty. As you have power struggles, sons and daughters jostling for not just the affection of an influential founder in the form of Carl Larsen, for example, in this case, but also jostling for influential positions and just to have a say in the running of the business. Moving on then, we see a discussion of Jord's approach to its business. One of Jord's main features, we're told, is and a competitive advantage is its focus on sustainability. They aim to minimize the environmental impact that they have through their very efficient production process. It reduces waste, etc., relies on automation, but also in the delivery of the final product. These are very energy efficient homes that they deliver. Each aspect of the design and manufacture maximizes the economy and efficiency of the house's functionality. So what's good for the environment is turning out in this instance to be good for the customer. So they're using wood, as I said, very, very energy efficient, keeps heat in, which reduces the energy bill for a customer, and that's going to please the customer. Also in terms of disturbing the site less than a traditional build. With traditional builds, you often see that it's absolute chaos as the diggers come in to dig up the foundations, etc. Raw materials are scattered all over the place, and it really, really disrupts the natural landscape perhaps that the building is being placed on. But with Jord homes, most of the heavy lifting takes place in the factory, and the actual site itself, there's a little bit of foundation work done before the arrival of the modules, but altogether it's a very much less disruptive process in terms of the site on which the home will settle. And because as well we're talking about very precise cuts with the wood, etc. at the factory through the use of machinery and technology, it means that there is less waste. So the timber is cut very precisely. It means that there is little in the way of waste material, and what little waste material there is, because it's at the factory, can perhaps be recycled a little bit more easily. Now, when we talk here about maximizing the economy and efficiency of a house's functionality, it's worth reflecting on those two terms. When you talk about economy, it's all about the cost of inputs. When you talk about efficiency, it's about maximizing the outputs in the light of the inputs that go into the process. Jord's leading industry expertise, we're told, in the combination of glass with its timber frame structure gives it as well a unique selling point, and it's a significant differentiator. They're using triple layered thermal insulating glass. That's great as well, just like wood is, for maintaining heat and keeping it inside the house, but also it doesn't heat up in strong direct sunlight. So on sunny days, you're not boiling inside, and on cold days, the heat is actually being retained. Now, these triple layered windows are indeed much more expensive even than double glazed glass, but they are, it seems, very much appreciated, especially by consumers who are concerned about keeping their energy bills down. And again, they're concerned about their impact on the environment. So what we're seeing here is ongoing cost savings for the buyer that perhaps are not factored in with the initial purchase. So not only is the initial purchase price of one of these prefab homes less due to the very efficient production that takes place at the factory, etc., but once the house is built, you have fewer costs, ongoing costs to contend with, and that should be very much a part of the marketing messages that a company like Jord Homes constructs. Technology is maximizing the house's heat efficiency, this triple layered thermal insulating glass, and that reduces energy consumption, as I said. The use of timber is very important. It provides the main supporting frame for these houses, and timber has a number of advantages, basically. It's a renewable raw material, so it's ecologically sound. It's also economically efficient. So it's actually a natural insulator, and that means that it retains heat very well. It's also quite pliable, so that you can fashion it into different shapes, etc., quite easily, and it is quick to use, and it's quick to employ in the construction of these buildings, which leads to a cheaper manufacturing process overall. The other thing as well, and it's mentioned there, is that timber is renewable, and there is reference to that a little bit later on. Jord says that for every tree that is taken down to be used in its production process, they will actually plant another one. So they're renewing this rich source of raw materials for them. No metal frames, it seems, are being used in this construction process, and what that does is that it makes it easier to transport the modules, timber modules, in flat pack format. As I said, wood is more pliable than metal, so it's easier to fashion and shape, and it's also easier to pack away and transport as well. And it seems as well that Jord is renowned for the individuality of each of its houses. So we're not talking about mass production here, whereas low-end and mid-range suppliers in the prefab industry are likely to be making churning out the same house again and again and again. Where Jord differs is in terms of how unique each house is. And that requires a customized approach and a customized build for each individual client. Of course, that adds cost and complexity to the production process, but it also justifies a higher price. So Jord is arranging individual elements of the building skeleton in an almost indefinite number of ways. And think back to your P2 studies, costs in the modern environment. When you talk about a larger variety of goods that you can produce, it tends to increase costs. Now, of course, that is somewhat going to be countered by the employment of very agile and advanced technology in the form of CAD and CAM. They can respond more easily, perhaps, than a human being can to this drive towards customization for clients. It's also interesting that current prefab designs, when you look at them, they're quite spectacular often, and they kind of tie in with postmodern and even futurist architectural design, and For that reason, they're also becoming quite popular. They stand out from other builds, and people are drawn to that. And Jord, it seems, is tapping into that market demand for something that is very modern, that has clean lines, and stands out from other traditional builds. Jord's customers were told they value the speed and the quality of the construction process. Now, there are two often competing factors. If you're going to go fast, sometimes quality can slip. And if you absolutely want guaranteed quality, you would tend to go slower. So what Jord's customers are demanding is that you do both. Go fast, but ensure that it's high quality. So that's a tricky balancing act for Jord to actually maintain, and they need to ensure that they keep that up if they want to go on charging premium prices. Once the prefab houses are actually pre-manufactured in the factory, they're transported in bulk parts or modules to the construction site. So the pre-prepared foundation is also laid at the customer's site while the modules are being constructed in the factory. The laying of the foundation can take place at the same time. And once on site, then construction takes on average between 5 and 10 days, which is incredible. If you have seen these buildings being erected, you might be familiar with the program, for example, Grand Designs. There was an episode years ago where a company called Hofhaus from Germany came in and erected one of these incredible prefab homes in about 6 or 7 days. It was incredible to see it. And again, the pre-manufacturing steps had taken place largely in their factory in Germany, and then they transported the modules to Britain and erected the house in about 5 or 6 days, I think it was. But what I would say with the transportation, it's quite a delicate process, and obviously you need a lot of space. You need quite specialist lorries, etc., and trailers to drag these modules to the location. You actually need cranes on the site to lift the modules into place. So all of that would add cost and complexity to the project. We're told then that in the last decade, Jord has established itself as one of the most exclusive prefab house manufacturing businesses in the world. Okay, so not just Corvola. So it's being demanded all over the world, and it's starting to kind of tiptoe into other markets in a very kind of conservative way. And we'll see at the end of this paragraph that shareholders are starting to question their conservative approach to manufacturing. Having said that, though, this business has a great reputation for high quality, bespoke designed homes, and customers are even willing to wait for up to a year to own a Jord house. And that is very much in line with the real life business I just mentioned now, Hofhaus, which is the perhaps the premium prefab home manufacturer in the world, German company. Again, they have a waiting list of well over a year, and celebrities have even started to buy houses from them. They're getting a lot of attention. So this waiting list then adds to the sense that Jord produces something that is very, very exclusive, very high-end, very desirable. And actually we see, interestingly, that Jord is quite happy with this. It's not that they're frustrated that they can't serve all of these people who are on a waiting list, and that, you know, that they're just running and can't catch their breath and they just cannot do any more. They're actually choosing not to produce more. They have a policy of maintaining current production levels, and that means that they get to position their houses as rare and exclusive products. So, in other words, demand is by far outstripping supply, and Jord itself is contributing to this undersupply. If they wanted to, they could ramp up production, but they don't want to. They want to maintain this perception of Jord as being something exclusive. And this kind of reminds me of what luxury watchmakers actually do. Companies, you know, famously like Rolex. There are certain models of Rolex, for example, the Rolex Submariner, which is very, very desired. And Rolex could easily ramp up production, but they choose not to. And they have this pent-up demand. There's an undersupply of this particular model. So if you went into a Rolex jewelers, they often just would not have the Rolex Submariner there. You would have to put your name on a waiting list and wait for a year or two. Rolex, in other words, is creating scarcity that then drives the desire for this luxury good. And Jord is actually doing something similar. Now, it's interesting in the very final part, as I referred to before, recently, in the last year, this policy started to be questioned by institutional shareholders because they think it's time to grow the business. You would imagine that it's quite frustrating for the 40% shareholders to see the business doing so well, to see it excelling and getting a world-class reputation, a worldwide reputation, and they're choosing not to produce more. They have this pent-up demand and they're not satisfying it. So they're perhaps exhibiting one of the hallmarks of a family-run business, which is conservatism. They're quite happy with their lot, and they don't want to go too fast because why would they? They're enjoying what they're doing already. But you can understand as well that shareholders would be somewhat agitated perhaps by that conservative approach. So undoubtedly, institutional shareholders are going to be a key stakeholder in this pre-scene. There is, I think, big potential for conflict. You might have activist investors agitating for change at the top. They might look for a change of personnel. They might want the CEO to step aside and get their own person in to shake things up. They might even start to push for an IPO with the reputation of the company being so high. They might think it's the right time to become a publicly listed company, and they could then sell off their own shares. So watch out for that. I think it's a likely exam issue. Just going back then to the production system. As I said before, it's quite similar for all prefab manufacturers to employ quite an automated, industrialized production system that depends on CAD and CAM and other technologies like that. But where the differences come into play, the differences between the lower end and higher end of the market is not with the production system so much, but it is rather with the quality of materials being used, the finishing, the extra features, etc., and any customization that's taking place. And we see that that is definitely the case for Jord. They are offering a lot of customization for their customers. And the fact that they're offering such customization might actually slow them down as well and mean that they cannot step up production in the way that their shareholders would like to. So it seems to me that Jord is employing what Michael Porter would refer to as a differentiation focus. You would have seen the generic strategies in your E2 studies. So obviously they don't have a cost focus. They're not trying to be the lowest cost manufacturer. They actually have quite high costs, and they're happy enough to pass a lot of those along to their customers with higher prices. And they're not serving a broad market. Instead, they're going niche. We're going to see in a while that they produce about 100 homes a year. So they're producing very, very few consumers. And another area, theoretical area that I think is quite important to consider in the light of all of this information is investment appraisal, which you would have come across in P2. I think it's quite likely that the institutional shareholders might start to agitate for the business to ramp up its production. And if it wants to ramp up production, it's going to have to take on more non-current assets. It might need to open a new factory and get in new machinery, and that's going to be costly. And the company might need to weigh up its options and think about the net present value for any investment, the payback period, the accounting rate of return, for example. If they are going to invest in non-current assets to grow the business, might there be allowances and grants available from the government? This is a company that is likely to be perceived positively by the government due to their sustainable practices, etc. And if you are talking about these kinds of investments, are there limits on the amounts that you can invest? And if there are limits, is it because of internal factors? In other words, you'd be talking there about soft capital rationing. Or Are there external constraints on taking on more debt financing, for example, in which case you'd be talking about hard capital rationing?